Yeah, focusing on the product. That's where I always feel the problem always comes in is making the product scalable is different than adding features on the products, and that's why I'm always careful. That's why I made the sentence very clear that the initial section, the initial part of the product needs to be very very focused. In order to grow yourself up, you will always come across a requirement from different customers to add more features, and you can easily divert it to becoming a much more complex thing rather than solving the problem that you're trying to solve. So you need to also start saying no in certain aspects and rather focus on what you're trying to believe and building. So I think that focus is extremely key and important. That what is your scope in the beginning to make you a success and really get the product market fit in the right way, then before being successful and rather making it much more larger.
This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare and education such as MyGate, Quizzes, MFine. To know more about Prime, visit primevp.in. Today we have with us Dilip Khandelwal. He's a very active member of the startup ecosystem. He's limited partner to Stellaris Venture Partners and Fireside Ventures. He has keen interest in D2C, consumer tech, and B2B SaaS. He's an active angel investor across 25 plus companies. Welcome, Dilip, to the podcast.
Hi, thank you, Siddharth.
So, Dilip, you come from a very traditional background. You were ex managing director for SAP Labs India and ex president for HANA Enterprise Cloud. What urged you, take a step forward in the startup ecosystem?
Yeah, I think Siddharth, it's a very very good question because just from a background, I come from a traditional Rajasthani business family. And we've been there in Bombay for close to 78 years, doing business in sweets and dry fruits and those kind of stuff, which, one of the things which uh, when I was growing up, which was interesting was we used to grow the business, but you were not able to scale um, in an hockey stick way, which you always would tell, right? In a traditional way, you always require uh, let's say, an appropriate amount of capital, appropriate amount of resources to do this. So I think scaling was a big issue without having too much of invested capital in. I think that was the reason why I decided to make a jump and go into a little bit on the corporate side of learning how the scale happens in these large firms and large companies. And ended up being very luckily ended up being at SAP. I spent close to 19 years at SAP. And I think the predominant objective, even of SAP, was twofold, as I said to you before. It was all about how do you learn the art of scaling? How do you scale the business from a small venture or a small idea and try to make it big? And that's why I try to learn and move to different departments and try to learn a lot of stuff. I literally went through every department in the firm, and as I said to you, at last when I was leading the HANA Enterprise Cloud business as an end-to-end business overall, I was able to grow this business from close to $30 million to close to $1 billion with a very, very good profitability. So I think which is what my purpose was, and I think and I wanted to take this learning out even to a startup ecosystem. And that was the reason, twofold. One is you, of course, have your heart into entrepreneurship because it's the background you come from. And the second thing is what you've learned and what you can give back. So I started involving in the ecosystem close to 5 years back. And I think the initial part was very, very interesting, and I was very, very lucky to have a friend like Goyal, who was, I was new him from SAP days when he was working with Helion, and and that was my first interaction with startups. And he helped me introduce to a few of the entrepreneurs, and that was the beginning. And I think now it's 5 years. I still try to make sure that I spend my Saturday and Sunday, which I love, and start talking about companies, meeting founders, and so I try to meet between 3 to 5 founders a week uh, on a weekly basis. I mean, of course, you move a few weeks here and there when you're traveling or not traveling, but I think generally you try to meet them. And you try to meet, I mean, met close to 1,400, 1,500 founders in the last 5 years. But I've been very, very focused on a couple of areas which I've learned, and these are predominant, like what you said. It's around B2B SaaS. It's around recently I've started learning more on consumer tech, and because the consumer behavior changes, and there is a massive opportunity for a lot of companies to create impact there. So I think it's been learning, but I think I just want to pass this learning on how do you create a large build out of the B2B SaaS companies in India, and even scaling to a large level.
Dilip, can you share, in these sectors, which are your various investments,
Yeah,
at
I
least the
think.
well-known ones?
Yeah, I mean, I can tell you a few ones. I think it's not a surprise. I think it's not known to a lot of people anyway. I think uh, the few investments which I have in B2B SaaS are Whatfix, Signzy. I have a B2B commerce in Moglix. I have an investment in the Yellow Messenger. Last year I did the investments with Credgenics, um, and of course I also like a little bit of content and trying to play good role with paper content. And then a lot of them which are there. I mean, there's a lot of traction which is happening also on the sales front with GTM Murray, and those are the few of the investments that I have. On on the consumer side, I think I started a little bit late. I mean, I have my first investments with Fable Street, and the second one with the Fitterfly, which is more targeted towards nutrition and right kind of health thing. So these are the few investments that I have.
Dilip, and how have you seen, from 2015 when you became active in the ecosystem to now? How had your perspective changed?
I mean, for me, initial part was all about learning because to be honest, in the beginning, I didn't know how this thing works and operates. So I think learning and meeting more and more people and founders was critical, just to understand how does this whole thing works, whether it is raising of the fund, whether it is what does it make for a beginning to happen, what does it take to scale up the stuff, why there is a huge amount of importance being given to the founding team, how the camaraderie exists, what are the exposure that are required in a particular sector to make them successful and all those things. So I think for me, it was initial part was all about trying to find out what are the common patterns and the common learning out of it. And that's why if you look at in the first 3 years, I kept my investments very, very limited, although I still kept on meeting a lot of people. Um, but in the last couple of years, I mean, I focused. I mean, I feel that I have a little bit of understanding now. I understand a few common challenges and the patterns that exist, and that makes it a lot more easier for you to decide on the investments as well as helping the companies in the right ways. So I typically tend to now do between 8 to 10 investments a year. Uh, but as well, I mean, I come from the background of B2B SaaS, and I think that exposure also helped because I think one of the things which I feel that is always missing in the ecosystem uh, is the operational exposure, which is critical and important, and which I bring in on the table. So it's not just you can scale or not scale, but it is also about what kind of.
Uh, so if I can ask, what are the mental models and frameworks that you have learned over the period of, which you evaluate, let's say, for example, in B2B SaaS?
I think for me, more important is I'm not a person who or let's say the framework would has come out of it. And I mean, rather try to avoid investments which is trying to solve multiple problems. I rather like the founders who want to go very specific, and there is a problem which is very small and very specific. That's where it interests. So example can be very simple. Is if somebody comes and tells that you're trading in end-to-end financial software, it doesn't interest me. If you go very specific on in the financial sector, what are the areas you're trying to solve, and there is a clarity which exists, then it is much more easier. That's the first pattern. Which is for me, it's a very very small, very very focused, and there is a problem which exists to solve. And of course, when you become large, you can always try to expand this into other areas. But at the beginning, it is extremely important. The second aspect, which is also important, is the quality of the team and the founder that you exist in. What kind of exposure you have, what kind of experience you bring in, how much passionate about your topic, how much energy you want to bring on the table, and how much hunger you have to solve the problem. That's the second aspect. I think it's an important aspect. I think the third aspect is important, which is what is the market which exists. But I don't look too much into detail because the way I focus on is I try to think about the investments which are more or less very very let's say category defining, or the market doesn't exist and they can define the market. So I think I put less focus on TAM in the beginning because at that phase, I mean, it is just very difficult. If you're investing in a known category, you always know what is the market which exists. But some of the companies which you try to invest or you try to take, you don't know what is the TAM. And I think you rather find it out whether is there's an options, whether the end user or the demand exists. And those are the things which are critically important. And if you have certain operational background which you've done in the past and you've gone through this cycle, it's a lot more easier to decide.
So you have seen a scale, where you mentioned that you took uh, SAP, the division you were leading, from $20 million dollars of revenue to $1 billion of revenue. How are you able to help your portfolio companies, let's say in B2B SaaS, to go from 0 to 1 million ARR and then from 1 to 10 million ARR?
I think it is, to be honest, Siddharth, it is all about the scaling. People need to understand it is not just a go-to-market issue. When you talk about scaling, it has to work in tandem across all the different areas that is existing inside the firm. When I say this, what I mean is whether your software is able to scale. Because it's software, it's very different when you want to give it for a few people or few companies, and then you want to give for mass. And when I mean by readiness, it is also got to do with what kind of quality standards do you have, what kind of flexibility, agility, and scalability which you can bring on the table. So one is on the pure software and the development side, whether the product itself will be able to scale and mature, and you don't run into an issue of once the product is ready and then you run into large. That's the because you can keep on selling, but if your product is not right, even if you have large numbers, I tell you uh, you will lose it very very fast. The second aspect is extremely important is the whole customer success, or once you get the customers, I think you should be brutally honest in terms of not losing them, because it's so difficult to get the customer in the beginning, and you need to put all the right mechanisms to put in place. And third is, of course, on the go-to-market side, that how do you try to scale this? You try to scale with your own people. How do you channelize it? How do you partner with people, depending on the industry and depending on the solution you bring in. So I think it's always about multiple things that needs to happen across the org, and not just focusing on a specific area. And I just try to make sure that the founders understand this piece. In the end, I always feel that founders are the right people to jump and decide. You just give them the options and help them navigate through this stuff in the right way to from the experience of your partner. But that's how broadly you try to judge it. I mean, if there are certain areas where you require partnership, or certain areas where you require good partners who you can go to market with them, um, you can uh, you can use them, or at the same time, how do you scale the product point of view, the right kind of investment that goes into scaling of the product itself is extremely critical.
Dilip, so you mentioned a couple of points, right? The scale has to be across uh, the organization. It's just not about go to market. So first time entrepreneurs usually just what I have observed typically end up focusing more on the product, over indexing on the product and than the other aspects. So is that a limitation that you see?
Yeah, yeah, focusing on the product, that's where I always feel the problem always comes in is making the product scalable is different than adding features on the products. And that's why I'm always careful. That's why I made the sentence very clear that uh, the, the initial section, the initial part of the product needs to be very, very focused. You, in order to grow yourself up, you will always come across a requirement from different customers to add more features, and you can easily divert it to becoming a much more complex thing rather than solving the problem what you're trying to solve. So you need to also start saying no in certain aspects and rather focus on what you're trying to believe and building this stuff. So I think that focus is extremely key and important. That what is your scope in the beginning to make you a success and really get the product market fit in the right way, then before being successful and rather making it much more larger. So I think that topic is extremely key. And in that topic, once you start getting a success on your product market fit, how do you make sure that this product is rightly scalable? It meets the security requirements. It meets the it can it be scalable to tens and thousands of users? Will it be an issue if it can be applied in multiple countries together? All those things needs to be fixed at the part of the product. And once this becomes successful, then you can easily keep on adding new functions and new features, but go step by step. At the same time, if you're not fixed that problem and you try to go in individual areas, it becomes large, more complex, and and everyone has a limited capacity, everyone has a limited resources, so your focus gets diverted and you're not able to fix any problems. You rather focus on small specific problems, solve the stuff, solve for scale, and then you can start always trying to learn on it.
And in this approach, have you seen the same observations while you were scaling uh, the SAP business which you were leading?
It's always, I mean, it's a lot more easier because I think large companies have a little bit more manpower and capability and all those things. But I think the right question there is always what is the focus, and you can keep that focus. It's you see this also in the large firms, right? I mean, you try to do too many things um, and you don't just tend to differ. Let's say and not do anything right in the right way. So I think that's a learning you can even extract this out of your past exposure. It's very, very common, and that you can apply this in the startup world as well. So
And Dilip, what's your framework around exiting these businesses? Right, you come in as an angel investor. Right, how long?
it's a very, very good question. Uh, I think, I mean, I don't know whether I'm right or wrong in this stuff because there is nothing right or wrong in this stuff. But I tend to believe that if you come as an angel or in the seed round, um, it is a little bit different than you come uh, at A and B, and even as an angel or whatever you call. I think if you're coming at a whatever angel round or a seed round, I think the right size for you to exit, I generally feel it is between whatever 150 to 200 to 250 million. So I think rather than waiting for a longer period of time, I rather believe in that if you come to that size and the scale, maybe you have an opportunity to exit as well, rather than waiting for a longer period of time. And of course, if you firmly believe in some of the things, you can always keep it. But just generally as a proposal, I mean, let's say you try to keep and try to exit. If you've made an early investments, you can try to exit when the company size is between 150 to 250 million or something like that.
And uh, you mentioned that size. Have you taken any exits because many of your companies today are at that size?
I mean, I did a couple of them. So, I mean, few of them I've always kept it for longer, but I think, but generally that would be my approach as I even go forward on this stuff, because I want to keep on exiting, because I think generally what I've learned and also seen as a part of my analysis when I did for 5 years in meeting founders, and it's not just founders you're meeting also a lot of people who are angel investors, and a lot of people even in the VC world who have done a lot of their past investments. And I think one of the biggest thing, it is all about exit at the right place at the right time, and in the sense of, so you need to also see a success. It's not about investing alone, but also having the right exits and an equal amount of exits. Um, so that's why I learned out of it, and I try to follow. I followed it in my couple of investments, but that's the general approach I will follow. Of course, I'll try to keep you where I feel it is, it can give you a large upside, but also help the company in a larger way. Right? For me, more important is that I do this angel investing is also because that's what I love. Money and the monetary part becomes secondary in a certain way, because in a certain way you're privileged to lead some life and you can invest, but you're generally well off in terms of what you do. And so I think it is all about engaging with right kinds of founders who can help and all those things. So that's how you build it in the right way. But to answer your question very specific, I think I will generally tend to follow that approach, but I will of course keep few of the companies which I believe in and where the founders require help to keep it in the right.
But tell me, as an angel investor, where you have seen company grow from zero to $250 million in valuation, typically with a 30 to $50 million check. I believe that's what, when they enter that stage. Don't you become too attached to the company that now I want to see this company go hit a $1 billion valuation or even larger ambitions? How do you balance that?
Yeah, Siddharth, it is completely right. I think the companies which you work with, you always try to build a very, very strong relation, because uh, you always tend to believe in the journey what you've gone through from whatever 1 to 10, and you would like to see from it going from 10 to 100. But also you need to be a little bit cognizant that uh, going from 1 to 10 is a different journey, and going from 10 to 100 is a very, very different journey of scale. And you require different kinds of investments, different kinds of management, different kinds of skills to make it happen. So that's why you still keep in touch with the founders and the people and all those things, but you should be also very careful that you are not a blocker in their growth as well. So I think just helping them and guiding them in the first part is very, very different than what is required for large scale companies and all those things. Although I must admit that I'm more fitted towards the second part from my past exposure and all those things. But I also feel that a lot of companies at the early phase can get a lot of benefit from what I've learned in the past. So I think it's a mix. That's why always say, if you're just purely talking from a monetary point of view, I think as an angel you should exit at that point in time. But if you want to keep the relations and they want to use and leverage and help from you, I think you should be able to.
And Dilip, what are your learnings from those companies out of your portfolio of 25 plus that didn't work out, right?
I
Because you
mean,
had some thesis while going in.
I can still tell the same thing. It is there are multiple things which happen. I think one is of course the market dynamics being changed, and maybe the product is not relevant and all those things. I think one of the key learning for me is when you are building the company, how much closer are you to your end consumer or your customers in the sense I'm really talking about really end user customer. But I think this is one of the biggest blockers you have, because the day you lose touch. Now, when I say lose touch, it basically means that if their requirements are move faster than your company can adapt and move, then you have a challenge, um, because if the time it takes for you to come with a feature what they require and their requirements have changed completely over a period of time and it is completely different, then you have a higher tendency to fail. And I think that the first lesson always is whether are you in close touch with the market dynamics and close touch with the requirement from the end users or the consumer which you're working with, and are your able software or your product what you're building, and it can be in physical product or software which you build, or I I think it has to be in close, let's say, sync with the dynamics and the requirement that you have from the market. That's point number one. Point number two, which is I always, this is my first point. I mean, people and the founders tend to a little bit divert from what they were initially supposed to do, which basically means that you were supposed to do X, but you start doing X plus 1, X plus 3, X plus 5, and you just keep on increasing the complexity, and then it becomes very, very difficult. Although I understand that maybe X was not the right one, and you come to an approach that it is not X, it is a Y that you want to pivot on. But that's fine. But then you need to still have that focus of being very specific on why then to solve the problem. So I think these are the two things which I feel it is predominantly that's what you've seen. Third, which is a little bit factor, which is very interesting factor is specifically when you look at how let's say now I'd call very specific on the enterprise SaaS or B2B SaaS. How it's evolved is also extremely important. I think it's very important that the companies need to understand that the market largely from an addressable point of view is United States and to a certain extent Europe and the scale and the size what you get out of your software that you build out of India for India is limited. And I know that it has changed in the last 3-4 years. I mean, just the number keeps on increasing. But if you want to become a large, big powerhouse of a software company out of India, still you need to tackle the topic and have this go-to-market feature for US and as well in Europe an important part of your game plan rather than focusing on you in that aspect. Although I know that a lot of companies which I've seen that they've predominantly felt that they can build a large company based in India, out of India, for India. I think maybe it's taking a little bit more time. It's just changed a bit. It got better, but I think still the largest and the broadest market for these companies is US. And I think that is another focus which is extremely key and important when you build specifically the B2B SaaS companies.
And for the sectors, especially like B2B SaaS and consumer, where you are interested in, what are the trends that you think will happen in the next 10 years that you are getting more involved in this ecosystem day by day?
I think I think I always categorize. I mean, it's important that when you have a very very sectorial focus or the area focus, you try to understand a little bit more deeper. So if you look at even in the from the technology stack point of view, I always categorize this into the companies which are getting built at IaaS level, PaaS level, and SaaS level. And I think what you're seeing still in India is almost, I mean, very very few IaaS. When I say IaaS, is the companies which are solving the problem at storage level, the network level, and the physical things, which are really the core of the infrastructure. What you start to see more and more is a lot of companies trying to solve the PaaS problem, which is the API based. They create certain APIs which can be exposed and you make learning out of it. You start seeing a lot of things happening in that layer on DevOps and low code, no code, and all those features. You start to see a little bit more from India. And where India has largely been successful is at the top level, which is building those applications, the SaaS layers, and all those things. So what has changed in the last 3-4 years is even in the past it was predominantly SaaS. Now we start seeing a lot of companies which are building into the PaaS layer. So there is an opportunity there where if you can build certain capabilities on this thing, which you can make it large and big. And so you start seeing that, of course, SaaS is where, of course, India will play a larger role, but you start seeing a lot of companies, even in the PaaS layer, coming out of India. I still feel that pure infrastructure is quite low still because that requires an ecosystem, that requires an addressable market and all those things, which is, I think, still predominantly in the western part of the world. But I think you start seeing those key trends, and I think maybe that is an area of focus that start seeing more and more of this IaaS layer companies, and you can make it larger there. So I think that's the theme that you see for predominantly for the SaaS companies based out of India. In the consumer tech, I think this is a much more open topic. Why? Because with the size of the population that we have in India, I think the behaviors are changing every day. COVID brought in a lot of stuff where people were able to consume, which they were consuming in a different way. And if you can find problem and a consumer brand and put right tech on it, I think you can create different business models. And I think you start seeing those things across all areas. I mean, so it just I still feel that they use less of tech still. They are still predominantly, of course, they use this, make the sell online and they make it available online and all those things. But I'm really looking at how do you enable more tech in this consumer brands and consumer focused companies. I think this is a massive opportunity which you see. Yeah. I mean, you of course see a huge surge on the brands and the consumer, but I think you see less of tech being used. But I think if you can use the tech along with this consumer stuff, I think this will be a big difference.
Uh, so since you mentioned consumer companies, so Indian consumer companies between this decade 2011 to 2020 spent billions of dollars in customer acquisition, right? And many of the consumer companies were written off because of the losses they incurred. We have seen, how only top two or three e-commerce companies survive. Do you see the same pattern of building so much, or say burning so much money towards customer acquisition again in this decade for customer acquisition, or do you think companies are changing their approach?
I think it is. I think it's a learning phase. So I think it's an evolution which has happened. I think you start to see a lot of companies uh, getting much more wiser in terms of even the customer acquisition cost and how you're building this through and all those things. It's a lot more easier in B2B SaaS because uh, that cycle is a little bit different. When you sell to an enterprise, it's a longer period of cycle, but it's a very sticky cycle. So once you are able to give the product and there is a constant flow of money which comes in. Of course, it's a longer period of cycle, but once you get in, I think you can make it much more longer and sustainable. So it's a lot more easier in B2B SaaS. You generally don't have that problem of spending too much of money and being non-profitable for a longer period of time. But of course, it's still valid when you are working with, let's say, if you want to have a brand and you want to make it visible and the customer acquisition cost is higher and all those things. But I think over a period of time you've learned that there is so much of right focus on making sure that the individual CAC doesn't go up and all those things. I think it just goes in the right direction. I think you'll start seeing more and more companies which are getting even profitable before you could imagine. It's largely not a problem in the B2B SaaS. I mean, if you have few clients and if you do it, I mean, you can easily manage it. But I think you start seeing that, that cycle. And it is a case of evolution over a period of last 5-10 years. And you will start seeing more and more companies being more profitable than you can even think. But of course, there'll be always few business models where everybody believes that it will not be profitable at all. And that's where you start, or you would see still few uh, uh, cases where you spend more money than you make. But I think over a period of time, this will also go. It's a part of the evolution.
And one area which you mentioned in India, which has not yet taken place, is that entrepreneurs on the B2B side haven't innovated enough on the infrastructure layer. For example, do you see companies in the same space as Datadog, New Relic,
I think
or
that I think they would. I think it's not about capabilities. It's not about the skills or capabilities. It's about the ecosystem which is there or exists. That the problem exists or not there. And that's why it is a lot more easier when you are based in the US, where you have a lot of these companies where you see the challenge and the problem, and then you can easily uh, adapt. And so I think we start to see the ecosystem growing, but that's the larger challenge. It is not what to do with. capabilities and the features and all those things. Even if you build the company here, you need to move to the US to learn, and then there is no difference, So you rather build it directly there, sitting there. So it's as I said to you, I mean, it's got more to do with the market there, the ecosystem which exists there, uh, the the knowledge even, and then the capabilities to make it through. It's a lot more complex and difficult in the hardware space and than in the software space.
Thank you so much, Dilip. It's been a wonderful interaction with you. Thank you so much for sharing your experience, your different viewpoints on how Indian ecosystem has evolved, your investments. It's been a pleasure to have you on the podcast.
Thank you, Siddharth, and I just hope that this helps a lot of our startup community. Uh, and it's been fun for me, and it was wonderful interacting with you as well. Thank you very much.